G'day guys, welcome back to the Devon Too Good Investing channel. Today in this video we're going to be having a look at Texas Roadhouse's third quarter 2021 earnings. So Texas Roadhouse is a company that I do own. I bought it back during the pandemic drop of 2020, and honestly at that time it was trading super cheap. Restaurant stocks were just beaten down, and I thought Texas Roadhouse was and still is a really high quality business with strong revenue growth. It's been double digit revenue growth for the last 10 years. They were strong across the board. Equity growth was really strong. Free cash flow growth was really strong. EPS growth was really strong. And now in these earnings, we're going to see if this momentum is still continuing. Obviously, recently unfortunately, the ex-CEO or late CEO, he passed away. So now they got a new CEO in, but the new CEO is someone who's been working at the company for a long time and honestly probably shares the same vision as the previous CEO. So if we get into the third quarter financial results now for Texas Roadhouse, we can see that they did just a touch under $869 million in revenue. And that is up 37.7% from 2020 and 33.6% from 2019. Obviously, this 2019 growth comparison is lower, as 2020 was the pandemic year where Texas Roadhouse suffered from lockdowns and reduced capacity in many of its restaurants. And we can see, if we have a look at their income from operations, it's up 76.4% from 2020. And it's up 37.5% from 2019. So the fact that this number here, the income from operations, is growing faster than the total revenue, that tells us that there is some margin expansion going on, and the company is being more efficient at turning revenue into income. And that remains the same where we have a look at their net income. In third quarter of 2021, they did 52.6 million, and that's compared to 29 million in 2020, giving us a growth of 80%, which is pretty insane for a restaurant business. And even a growth of 44% from 2019 is pretty crazy too. And then the story's the same with diluted earnings per share. They did 0.75 cents. They're up 80% from 2020, and a smidge under what their net income was for 2019. This indicates just a tiny bit of dilution. It's nothing to get out of bed for. It's nothing to worry about. And if we have a look at their year-to-date numbers, you can see much of it is same kind of story. You can see that in 2020. The company only just broke even, It only just broke even. They only made $11.7 million. It's pretty crazy though, considering even if you lock down, you still got to pay expenses and all that. But you can see back in 2021, back to the beast that Texas Roadhouse is, $192 million so far this year in net income. And compared to the 2019 number, it's grown 45%. We're going to ignore these large, crazy numbers here because, that's just an outlier. It's just a skew. But if we focus on the comparison to 2019, I think it's a better representation. And look, Texas Roadhouse, they're performing extremely well. So if we have a look now at the comparable restaurant sales at company restaurants, it increased 30.2% and 22.3% compared to 2020 and 2019 respectively. And then comparable restaurant sales at domestic franchise restaurants increased 33.5% and 20% compared to their 2020 and 2019 numbers. And what comparable restaurant sales reflect is the change in year-over-year sales for restaurants open a full 18 months before the beginning of the period. So it is just the fact that these are like 30%, 20%, you'd probably usually be happy with something around 10%. Like 10% would be excellent, in my opinion, for a business like Texas Roadhouse. But the fact that they're doing 20%, 30%, look, that's is definitely beating my expectations. So if we have a look at average weekly sales at company restaurants, they were 120,000, of which 15% were to-go sales. So we've got to remember this 15% here, it didn't used to exist. Like it just, before COVID, there was no to-go sales. So now it's opened up a new stream of revenue for the business. And it's probably reflected in some of that pretty crazy revenue growth. Restaurant margins, they increased to 15.7% compared to the prior year, which is 111 basis points. So, look, companies becoming more profitable. They're becoming more efficient with transferring revenues into. However, the increased margin, it's been offset a little bit by higher food and beverage costs, which the company claims it was driven by commodity inflation, which makes a lot of sense. This is pretty much what every company that produces some sort of service or product, they've all been reporting the same thing. Higher costs, inflation, higher costs due to inflation. It's just blah, 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 blah. But it's, even though they're all saying the same thing, it's true. Like, you see it all around us. But the thing is, if this sort of, inflation dies down, it's just going to lead to more margin expansion for Texas Roadhouse. And if it doesn't, well, look, you're probably going to be all right either way. We can see that they have resumed their repurchasing of shares. They purchased a total of 161,000 of common stock for 14.7 million. That's, it's a pretty small buyback considering the amount of income the company earned. But I mean, it's probably okay too, considering the environment that we're in with COVID. It's probably better for Texas Roadhouse to play it safe. Ended the quarter with $346 million in cash, and they chose to maintain $190 million of debt. So they could easily pay all their debt off today, not have to worry about it, but they're choosing to keep it on the balance sheet. It is what it is. It doesn't really matter. The balance sheet is all good. See, year to date, comparative sales, 40% pretty much, just like a smidge under 40% for 2020 sales, and then 17% and 14.8% for 2019. And then for the whole year, you can see that weekly restaurant sales year to date, they're pretty much 120,000 per store, of which 18,000 were to go sales. So you can see, I believe it was 15% for the third quarter. So the to go sales do seem to be becoming a smaller amount of the revenue. I'm assuming it could be due to two things. It could be demand. Maybe people aren't liking the to-go service as much anymore. Or maybe, and this is what I think is most likely, is that the stores, their capacity is reopening, and they're just making more revenue from sit-down meals. So it's making the to-go sales look smaller. Year to date, they've opened 18 new company restaurants, including 4 Bubba's 33s and 2 franchise restaurants. And we can see the restaurant margin has increased 690 basis points to 17.3%, which is very welcome. And then finally, diluted earnings per share increased to $2.74 from 0.17 in the previous year, and this is pretty much due to the recovery from Rona. In terms of 2021 outlook, the company is already, well, we're already 4 weeks into the fourth quarter. But if we have a look at comparable restaurant sales for the first 4 weeks of the fourth quarter, it's increased 22.6 and 23.6% respectively compared to 2020 and 2019. I mean, the momentum is continuing, it looks like. And they've already implemented a 4.2% menu price increase. This will be to counter commodity cost inflation, which they're expecting to be about 10%. And we're looking at 26 to 29 company restaurant openings across all concepts. That's pretty crazy. Store week growth of approximately 5%, and total capital expenditures of about 200 million. So that's going to go into maintenance, and that's going to go into growth of building new stores and renovating existing ones. In terms of the 2022 outlook, management have provided the initial expectations for 2022, so they're expecting positive comparable restaurant sales growth, which includes the benefit of 2021 menu pricing actions. They're expecting 25 to 30 Texas Roadhouse and Bubba 33 store openings, store week growth of 5 to 6%, commodity cost inflation in the high teens for the first half of 2022. That's pretty insane. Wage and other inflation of 6%, tax rate 15%, total capex 230 million, including as many as 6 relocations. Well, I mean, I can't be mad about it. Like, this is what I expected. Like, we're expecting inflation, we're expecting, wage growth. We're expecting, about 15% in tax. That's not very high. Capex slightly higher than last year, but that includes as many as 6 relocations. Positive comparable sales growth. Hey, can't be mad about that, considering that our sales growth is range bound between 20 and 30% for most categories. And then 25 to 30 new restaurants. Good quarter. Excellent quarter. I'd probably rate these earnings probably 9 out of 10. It's hard to fault it, really. I'll have to go listen to the conference call to piece it all together, see if I can pick up on anything new. But guys, that's it for the Texas Roadhouse Q3 earnings. Hope you enjoyed the video. Make sure you like my channel. Make sure you like the video. Make sure you go subscribe to my channel. I've finished stumbling over my words. So see you guys. Have a good one.